Hi, I'm Adam, and in this video series I'm going to be taking you through how to create your first client in Truth. In this video, we'll take a look at how to input a downsized property. We'll explore how to work with pensions, looking at how data feeds through to each of the statements we've looked at in the previous two videos: net worth, income, and expenditure. We'll also introduce some of the dynamic pension benefit options in Truth. Let's get started. Earlier in this series, we looked at the impact of selling Kath and John's main residence at Kath's age 85. This released all the equity in the property, but, of course, they'll need somewhere to live. Let's create a smaller property for them, which will be purchased when they sell their current main residence. From the fact find, we can click on Properties on the left. Then click on the Add a New Property item button to create a brand new property. As we've updated this information today, we want our last updated date to show today's date. We can press the T key on our keyboard to automatically input today's date in any date field. In our description, let's put downsized property, and the owner-occupier will be joint. Note we could also choose either Kath or John as the sole owner, or joint tenants in common. Let's input a purchase date of age 85, the same date on which they sell their current main residence, and a purchase price of £350,000. As we can see, their current property is worth £500,000. Now, rather than releasing all of the equity from the current property, we'll be releasing just the difference, or £150,000, plus growth. Whenever we create a brand new item in Truth, we're always asked to check the what if settings. This allows us to specify whether an item should be hypothetical, or how it will be impacted by catastrophes. If you'd like to know more about these options, I've added some links in the description to technical sessions on scenario and catastrophe planning. For now, let's save our item. In our last video, we input some income and expenditure for Kath and John. This included an increase to their lifestyle spending during active retirement, but not the income to finance that spending. That income will, of course, come from their pensions. Our template has created two pensions for us, one each for Kath and John. Let's input a value into John's pension. Note, in the pension item, we have a number of tabs. The Details tab records the basic information about our pension, such as the description that we show on statements, and the owner or pensioner. The Payment History tab is where we input any current or historic contributions into the pension. As well as populating our client's expenditure picture, recording pension contributions allows Truth to calculate our client's carry-forward position. The Fund Value tab is where we input the value of our client's uncrystallised pension rights. In this case, John's pension is worth £800,000. Let's delete the placeholder value of £1 and double-click on the new line at the top. This will automatically create a valuation for today's date. But you can adjust this to the date of your valuation if you wish. Truth will take this value and project it forwards at our assumed fund growth rate, including any contributions from payment history. The growth rate in this pension has come from our template, but can easily be amended here. As John has already retired, he is no longer contributing to his pension. Simply click No to dismiss this prompt. Pensions are a great way to understand how data flows from the fact find through to the other statements in Truth. DC pension fund values will show on a client's net worth. Their contributions will show on the expenditure statement. And any benefits will show on the client's income statement. Let's take a quick look at how the data we've just input is reflected on the net worth statement. We can see that John's pension grows from its current value of £800,000 to just over 1.2 million. This is based on the 4% growth figure we saw earlier. Now let's see how we take money out of John's pension. As we've seen in previous videos, as well as returning to the fact find, we can simply double-click on an item from any statement to open it. Let's double-click on the line John's pension on the net worth statement. To take money out of our pension, we need to look at the Benefits tab. As you can see, this tab is split into two windows. The top window is where we input our client's benefit strategy. The bottom window will display crystallisation detail, as well as any lifetime allowance charges our client might be incurring. Double-click on the New line in the Benefits grid to input some benefits. The first thing we need to do is choose a date on which benefits will start. Once again, we can input a calendar date on the left, an age on the right, or select a key date from the drop-down list. Let's choose our retirement key date. As this is John's pension and John is 5 years older than Kath, the age that our key date relates to is 70, not 65. We have a comprehensive YouTube video looking at pension benefit options, which I'll link to in the description. For today's video, we'll look at a couple of simple, dynamic options. Truth allows 3 different options for income type. Lump sum is any use of the UFPLS legislation introduced with pension freedoms. This could be taking the entire pension as a lump sum, taking regular lump sums, or taking one-off or ad hoc withdrawals. Annuity will exchange all or part of the client's pension fund for an income for life. The drawdown option will crystallise all or part of the client's pension fund, release tax-free cash, leave the fund invested, and give the option of a taxable income stream in future. In this case, let's choose the drawdown option. And let's assume that John crystallises 100% of his pension fund, taking the maximum 25% allowable tax-free cash. On the right, we have separate control over any taxable income that John takes from the remaining fund. Drawdown income doesn't need to start on the same date that funds are crystallised. For example, John could take his PCLS at 70, then start taking taxable income at 75. Whatever start date we assume, Truth can automatically calculate the level of income this pension can sustain over any given period using the Auto Update option. If we choose a start date of retirement and tick Auto Update, we get a proposed sustainable income figure of £4,500 a month. Looking below, we can adjust the criteria for this payment by changing the frequency and the escalation of the income. If we want an income that increases at 3% to match our inflation figure, our starting income figure drops down to £3,000 a month. Let's save our benefit selection. The 2 grids on the Benefits tab in John's pension now show the detail of what we've just input. The top grid shows our chosen benefit strategy. The bottom grid shows the benefit crystallisations, as well as any potential lifetime allowance charges. In this case, there are no charges to display. Let's save John's pension and see how our planned benefits impact on Kath and John's net worth. There are a couple of key things to note here. The first is that the value of John's pension drops at Kath's age 65 when he releases his tax-free cash, and the value of their cash holdings rise accordingly. The other is that rather than increasing to 1.2 million by John's age 100, the pension fund is now gracefully depleted. We can also see that, prior to downsizing, there is a period when Kath and John have a significant deficit. Let's fix this by inputting some detail into Kath's pension. With John's pension, we've seen how the asset value impacts on the net worth statement, as well as how benefits impact the income statement. As Kath is still working, let's look at how contributions to pensions can affect our client's expenditure. From the Payment History tab, let's record Kath's current personal contributions of £250 a month. To get started, click Add to add a new contribution. The payment type will be contribution. We can leave the Paid By option as the pensioner. If we wanted to add an employer contribution, we could simply add a second line here. To allow Truth to calculate carry forward, we could specify a historic start date or detail past contributions. In this case, we're just interested in the expenditure element. To show a full 12 months worth of contributions this tax year, we can simply press F on our keyboard to input the start of the fiscal year, the 6th of April. Our gross payment will be £250 and the frequency monthly. This can be level or escalating. Let's assume that Kat's contributions will increase at 3%, in line with inflation and her salary, and will end on our retirement key date. Let's see how this affects their expenditure position. We can see here that there's a £3,000 contribution to Kat's pension listed under investments. If Kat's contribution is made net of basic rate tax, we can simply double click and tick the box Show Contributions Net of Basic Rate Tax Relief. Note the contribution is adjusted to show the net cost to Kath on the expenditure statement. Let's go back into Kat's pension and add a fund value and some benefits. Let's input a fund value at today's date for a value of £500,000. Moving on to the Benefits tab, let's try something a little different. Let's opt for regular lump sum withdrawals, rather than moving the whole fund to drawdown. To do this, simply double-click on the New option in the Benefits grid. Choose our retirement key date as the start date, and choose the income type lump sum. We now have the option of specifying either a pound or a percentage value for our income. Just like with John's pension, if we choose a percentage value, the income provided by Kat's pension will change if we increase contributions or alter the fund growth rate. If we choose a pound value, the income won't change, but the fund might last longer. Let's opt for an income of £50,000. This will be taken annually and will escalate in line with inflation. We don't need an end date. Of course, we could end this withdrawal at age 85 and take a lower income amount from that date if we wanted to do so. Each payment will include 25% tax-free cash. Click Save to save our benefit strategy. The crystallisation grid in Kat's pension looks very different to what we saw in John's. Based on our chosen benefit options, Truth is performing multiple tests against the lifetime allowance, each time Kath crystallises benefits from her pension. Now, let's save Kat's pension and take a look at how these benefits appear on the income statement. Last time we looked at Kath and John's income position, they were woefully underprovided in retirement. Let's take a look at the lifelong income chart in a little bit more detail by clicking on the Lifelong Income Chart tab within the income statement. Now we can see that, as well as their state pensions, they have both taxable and tax-free pension income in retirement, as well as ongoing drawdown income from John's pension. To view the detail for any year on the income, expenditure, or net worth statements, we can use the calendar option on the toolbar on the left. Click where it shows the current tax year to bring up the calendar wheel. We can choose any age, any tax year, or any key date we've input for our clients. Let's choose our retirement key date. Remember, we have one-off spikes of income excluded. Let's include these to show John's tax-free cash by clicking on the filter icon on the left. In the first year of retirement, we can see a large lump sum from John's pension, followed by a small ongoing income amount. We can also see our UFPLS withdrawals from Kat's pension, each of which consists as taxable, as well as tax-free income. Truth is automatically handling the taxation of our clients' pension income based on the strategy we've chosen in each individual pension item. If we scroll forwards to the following year, we can see their ongoing retirement income. In this video, we focused on pensions and how they impact on the net worth, income, and expenditure statements. We've also looked at how to input a simple downsize. In our next video, we'll introduce the cash flow statement and look at how all the net worth, income, and expenditure detail we've input comes together to form our client's lifelong cash flow. You can watch that video now by clicking on the link in the description or the link on screen. Thanks for watching.